The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. Tom O'Brien, Dow Martin. Tom O'Brien, we appreciate you growling and prowling with us out here. We have the Dow Industrials right now down 58, Nasdaq's off 11, S&Ps are off 8.5. We have gold up 310. You got the silver market up 8 cents. Bonds, you have the 10-year up 3 ticks, the 30-year up 20, and good old King Dollar is giving it up. That's down, well, it's only down 74 right now at 96.97. Now, if you haven't test drove the Nadex platform yet, folks, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit that banner, bring up the exchange. They'll put $25,000 of paper money into your account. We'll walk you through how these contracts work. And, of course, don't forget, Daryl has an outstanding show every Tuesday, Thursday, 1 to 2 Eastern Standard Time. We do this show every Friday morning, 10 to 11 Eastern Standard Time. Daryl Martin, what's going on? Daryl. Okay, so we'll get...
So we got a flat market going on in NASDAQ right now.
Sorry, say that again, Daryl?
Oh, I said we got a flat market going on in NASDAQ right now.
Yeah, we sure do, right?
And, well, so let's take advantage of it.
Yeah,
Yeah, there's the laughter. All right.
Yeah, totally. And folks, you know, if you trade, well, if you haven't traded this index yet, right? This exchange yet, right? Come on over, test drive it. If you're a futures trader, they changed the structure inside the NDX 100, and I can show you not only the defined risk inside this, but the liquidity inside it. And, you know, for every 2 contracts that you're trading, that's 1 full contract on the E-minis for the NASDAQ. And it's pretty dynamic.
You got yourself a fun new trading vehicle.
I have a dynamite trading vehicle. And what it is, and they're called, well, we call them the master spreads, folks. They're 80 points. So what happens is that inside of this, it is really just like trading the futures, except that your risk is less. Now, the profit is definitely less also, because like this morning I put one on. Most of the time when you put these on in the middle of the, yeah, if you can show them what we were doing out here.
You want me to pull it over here?
Yeah. So what you have, folks, is this. This is about as true as you can get, meaning that when you put these trades on,
So this is the NASDAQ 100 we're looking at, the chart, just so everyone can see on Tiger TV. And these are the, let's pull up the spread market just so we can see what it's at right now. So you're in this right now, right? This is your account we have up.
That's
so
right.
You're trading the 2 spreads for 1 futures contract.
I'm trading 2 spreads to 1 futures contract. You can see that, you know, it's cheap money. I mean, instead of putting up $4,000, I put up I think $800.
Yeah, your position value, just so I know it's probably a little small, but is $1,100 right now in these 2. But that's being up 200, so you were only putting on about $900.
Exactly.
And you were probably right in the middle of that 80-point spread almost, were you?
I was.
Yeah, you were.
I was. We were right in the middle of it.
So you had about 40 points up, 40 points down.
Right.
Defined risk.
Right.
Yeah.
And what happens, folks, this is what's so cool about it, is that you don't have to stay in the spread.
No.
I mean, it's just like a futures. You can basically, you know, what the difference is, however, is that your defined risk is $3,000 less.
Right.
That's the bottom line.
And as far as getting in and out, right now the market's ticking at bid and offer 0.1, 0.2. So you can. You're not paying a premium between the bid and the offer, at least. You're not paying that middleman.
No, you're not.
You're not. So you can trade them a lot.
And what they're dynamic. That's the bottom line. So I suspect, you know, the flow is there too. I mean, you can see right now there's 30 on each side. Yeah. 30 on each side. No one's going to do 15 full contracts.
And a lot of them have 100 on each side, as I look at it.
Right.
Yeah, the new end of days. I actually was just talking to Dan, and because I've been pushing for these like crazy, as you know, and they got the update done.
Yes.
And now they actually are quoting at 100 on the end of day. The ones that start at 6 and go to 415.
Right.
They're on 100 both sides now.
Yeah, which is beautiful. And so what also happens, folks, is this: is that this morning I was saying to Tommy, when I first get up this morning, I said, man, I should have laid these on. I didn't lay them on until like 10 of 8. And before I work out like every morning at 7 o'clock with Nico, and you can see at 7 o'clock, these things were flat. Yeah. And one of the main things, folks, depending on how long you've been in the marketplace, right? The way that the market had climbed up yesterday at the very end, I knew that was a gaffe. Yeah. Well, and what you get, well, you don't know.
You just wanted to short it, right?
What happens is that I've been trading these every day. So when you get used to them, number one, just in general, and I've traded plenty of futures, but that last 7 or 8 NASDAQ points, that's so easy to get that they love doing that. Right. Do you know what I mean? So the thing's laying there. Right. So it's going to get really intriguing today to watch this whole thing shake out, particularly because we have window dressing. They should be able to hold this thing up, and they can't. I mean, the S&P right now, just looking at this, looks like it's going to be ready to croak in a second. Yeah. You know, and I think there's a lot of action. There's a lot of action for a Friday. You know.
So where did you get into this trade? What time was it at?
At 7:50, I believe. Yeah,
so
7:56.
So you were in right around here.
Right in there. Right
in here.
Right.
So I mean, that's a nice.
No, it's a good expansion on the way down.
You're still getting some nice acceleration.
And what happens? And so if we look at that, what you're gunning for, folks, is this. What I'm gunning for specifically is that you have some high volume intraday lows out here. Now watch what you have inside the NDX 100 though, which is really cool. When the NDX 100, everyone's trying to figure out how it went down 80 points and went up 80 points the next day. What happens, this is one of the main reasons I like trading that vehicle. It has to do with the weighting structure inside the NDX 100. But what happened is that when AVGO said they're going to take over Broadcom, both of those equities went up. Broadcom went up 20%, AVGO went up 15%. Okay. Okay, so now watch how you can handle that. When that happened, I lost because I was in those shots.
You were short. Yeah.
I was short, but I lost. Big deal. Okay, the day before I won, I lost. Yep. Okay, now how do you take that loss and say, okay, now what's happening? What you want to wrap your head around is this: I knew that they went up so high that the following day, okay, the probability that they can go up higher is nil. Sure. Not nil, but it's just about nil. And sure enough, that's what you have. Yep. So that's really cool because you're using the weighting structure for your advantage. Sure. You know, isn't that cool?
Sure. Like you're always saying, you have to watch Apple if you're trading these.
Oh, there's no doubt.
That's just a huge part of it. It is.
Look at volatility, baby. We got volatility.
That next move. You have a nice trade on. Yeah. I mean, that's big. Yeah.
So let's go. I think it's time that we got to go look at this euro for a second. I'm tempted to. Let me see what's going on here. See what happens on a Friday too. Yeah. So hey, Darryl, what are you up to? What are you doing?
I'm taking advantage of the implied volatility being massive because of Greece right now. Okay. Okay. Yeah. I'm taking advantage of we had basically a flat market yesterday, flat market today. We're really low on volume overall. Yeah. Compared to the average expectations of volume on NASDAQ. Yes. And so I'm doing a neutral trade using Nadex on the iron condors. Okay. Sweet. And what I do is I use the scanner. Okay. Yeah. I hop in. And the contracts that I look for, I'm going to do a trade like this. I look for trades that basically have inverted proximity, meaning that I'm able to sell lower than the market, and I'm able to buy higher than the market. Okay. So if I can do that, then if it stays within my range, which is usually a pretty massive range. Yes. I did one yesterday for just on one condor, and I was able to bring in $125 on a 25-point break-even range. Wow. So basically, and this was like during my show, so like between like 1 and 415, 25-point break-even range, bringing $125, so a perfect little sweet trade. And I got about 100 of it as the time decay came in. And just grabbed it and got out. And was perfect timing because then about 15 minutes later started pulling back up. If you would have left the thing on for the entire day, it would have broke even. Okay, just by taking profit off, I basically captured. I usually go for 80% of whatever the max profit potential is in something, and that seems to work out a lot better than trying to leave it on to get that last 20%. Yes. And but anyway, hopped in there and grabbed it. So like right now, what I have on is I have a buy of the 40 45.30, 45.60. I'm sorry. Buy the 4500, 45.30.
Okay, on the NDX, yeah, okay.
Yeah, but I bought it down at 45.19.2.
Okay.
And then I have a sell the 45.30 to 45.60. Okay, and I sold it at 45.35.6, so quite a bit higher than where we're at right now on the market. And so I've just been watching, here's my chart on NASDAQ, a whole bunch of squiggly lines on there, but bottom line, just price action, just bouncing between settlement and 0.5 deviations. Okay?
Yes.
And so I got basically two things going on. One, I'd like the market to stay between 45.19 and 45.36, because that's where I bought and I sold. And so with that, I'll make my maximum profit.
Okay.
All right. Now, if it goes below that, I have a hedge of the additional profit that I can make on each side of the trade.
Yes.
Okay. So basically, I got a 5-point hedge below 45.19, which will take me down to about 45.14. Okay.
Yes.
And on the opposite side there, I got about a 10-point hedge of where I bought. So since I bought at 45.19, it can go all the way up to 45. I got 10 points on the way down. So yeah, basically I got a 10-point hedge on one side, a 5-point hedge on the other. With the two, I got a 15-point hedge on both sides. So I got a pretty high probability of this trade at least finishing profitably on the trade.
That's nice. Yeah, it's huge. You stay right there, folks. Tom O'Brien, Dow Martin, Tom O'Brien. We appreciate you growling and prowling with us. Dow right now is down 66. The Nasdaq's off 16. S&Ps are off 8.5. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tom O'Brien, Daryl Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. And, folks, once you get the exchange up, don't forget Daryl has an outstanding scanner. You can test drive that 30 days absolutely free. The way you get it, you come over to our website at TFNN. You're going to go to the very top where it has newsletters and services. Right there, you're going to see test drive the scanner, 60 days absolutely free. So, you know, looking at this market out here, it looks like, you know, gold, we get up 330. The indices themselves, you know, bouncing around. You look like you're in pretty good shape there at this particular point because we got 45.24. That 45.21 inside that NDX 100, though, that's where it looks like it's building some cause. So,
oh, yeah. I mean, trust me, I'm keeping an eye on it.
Oh, no, I know. Listen,
yeah. But this is honestly probably among my favorite trades to do on Nadex. Just sit back and I mean, if I see a strong trend, then I'm probably gonna go on and just throw a short on to hedge it. I have a crap load of premium. I got 15 points. I got $150 of premium on this contract.
That's huge, man.
That I'm
collecting. That's gravy. That's what's happening there, folks. Is this? So watch what Daryl's saying. Is that every minute that ticks through the day, he's collecting money because it's decaying.
Yeah.
Okay. You know, and the way these contracts go are just really phenomenal, man.
Yeah. You know what I mean? A lot of premium in.
Well, and what it means is it has to. I have a 30-point break-even range.
Yeah.
The market can move down 15 points.
Right.
From 45.30 or up 15 points from 45.30.
Yep.
And I get all my money back.
Yeah.
If it moves, every ticket moves beyond that, I lose $1. Every ticket stays closer to 45.30. Okay.
Yes.
I make $1.
Right.
So if it goes right in the center, I make the entire maximum profit there on the trade.
Right.
I'm doing 5 contracts, so as you can see, that adds up.
Right. And like you said, you can always just get out if you have to or want to.
Exactly. Yeah, you can. I mean, well, it's amazing how you literally really can easily get out. Like this thing was just really going against me, and I'm like, this isn't my trade today. I mean, I'll be up 50 on one and down and I'm talking doing 5 contracts. Okay.
Right.
So I'll be up 50 on one and down 60 on another.
Yeah.
So I'll be like, $10. You know what? I don't for whatever reason, if I just get that, oh God, it's coming trade.
Yeah.
You know what I'm saying? I mean, we're talking about a $10 loss on a neutral trade. You can't pull that off on an iron condor. I traded iron condors for 8 years on the Russell
Okay.
And when things got near your strike, you got taken to the cleaners.
Okay.
Okay. So I can do these trades with a massively wide intraday range. It's a lot easier to predict neutrality on one day than it is for a month or a week.
Yeah.
And I mean, so any iron condor trader out there should be just dying to do these.
Because
you can make literally in a day a lot more money than you can make in a month on the Russell, with a lot less money tied up, and with a lot better. How do I put this? A whole lot better risk reward ratio.
Yes.
Yeah.
So, I mean, I did those things. I mean, I loved it. I used to call them my golf trade. I mean, just every single month I was collecting about 5 to 6%. After I took profit, 5%. And I'd put the trade on. I put it in Think or Swim, and I'd have it set to, hey, basically exit if my strike is hit, basically at market. And then I'd say take my profit if I only have 5 cents left of premium. And I just go out and play golf all month. I mean, you put enough money on them, you can, collect some nice cash that way.
Sure.
And 2008 came, and I hopped out, fortunately, before the entire thing blew, and because I just saw the RVX spiking up before the market was crashing, and still got hit on the trade. And I mean, I don't think you could have traded options, any kind of in-the-money options in October 2008 without getting some sort of, whammy just because of IV. And
it was a blowout, right?
Now after that, it was still good, okay, because the IV got so high that they were all the way out, so you could still trade the trade just as easily after the high IV. It was that transition, and that's what really got me into okay. I got to figure. I mean, there was just so much volatility. I felt just stupid as sitting there collecting 5% a month, and that's when I actually started getting into really just hammering it and starting to figure out how to capture volatility in the market, and. But it was good because I learned how to do neutral plays like this, and I also, of course, take advantage. You see me trade directionally probably 90% of the time. But these iron condors, I mean, these are put them on, go to bed trades.
Yeah.
These are put them on, go to work trades.
Let me ask you something. I'm looking
These are put them on at lunch because I did it yesterday during lunch and go back to work trades, and then so it's a really good trade for everybody.
I'm looking, as we're talking here, I'm looking at buying the euro, right? So what's happening? Okay, this would be the 3 p.m. right? Yeah, we're going to talk about this when we come back. In fact, I'm gonna buy it right now. Then you can bisect it and dissect it off me.
All right.
This is Tom O'Brien, Daryl Martin. Tom O'Brien, appreciate you growling proud with us, folks. You stay right there. We're going to be coming right back. Dow right now is down 77. Nasdaq's off 17. S&Ps are off 7.5. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year market-safe futures economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, Darryl Martin. Tom O'Brien, appreciate you growling and prowling with us out here. Okay, so we were talking about the euro. So what I did out here, and this is what the question would be, Darryl, is that I went along the euro, right? Here, you pull the same thing up. Maybe I'll buy another one. Let's take a look at that one.
We have it up. This is the euro graph.
Okay.
And this is the market that you bought.
Right. So.
Sorry, that's not, yeah.
That's
the
Nadex,
graph
right?
Pulling up.
Okay.
Yeah.
So what I'm looking at is this. I'm taking, the euro right now is at 109.89. And the premium, okay, so when I was buying this, I took, I believe it was, I took more of a risk than this.
Yeah, you're buying.
Yeah, there it is. Okay, so I was buying one. I think the maximum loss I had was $150, and the profit was 100, right?
Yeah.
So what my question, Darryl, would be is this: is that on something like that, right? I'm actually paying, even though I'm at the spread, right? DXM5. Let me just see something.
Okay, so talk about the euro dollar. What the 1085, 1095? Is that the one you're looking at?
Yeah.
10.845 to 10.95. Yeah.
Yeah, there we go. Yeah. Okay.
So when I'm buying this, okay, so the indicative is 874, and it's at 8. Oh, it's 9.
8.9.
Yeah. I mean, that's about as close as you can get, right?
Exactly. Yeah, you got that one. You got the master spread. For 3 o'clock as well. So either one of those, yeah.
So in doing this, am I actually paying? I'm not paying premium, but when I'm looking at
it's basically right now it's 2 ticks off of the underlying market.
Yeah.
Right.
But you're collecting by buying that 2-tick premium.
If you buy it and the price is above the market, then you're paying the premium. If the price is below the market, you're collecting the premium.
Right.
Yeah.
So right now there are,
I guess it's splitting.
There are 2 spreads that are actually below the market that have any kind of value in them. Not a lot, but they're not the one that you're doing right now. So the one.
So see, that's tough. Now why? Because he's putting up, he's risking 3 to 2 basically, risking 150 to make 100. So
if he rides it down 150 points, yeah.
Right. I just mean he has a defined loss that's 3-2 versus his defined potential profit. You know.
Okay. Well, what he could do is he could go down and he could do the daily 3 o'clock that started at a 6 yesterday.
Okay.
And then he could have a 319 to 279.
Okay, and that's pretty much closer to a split.
So bring that one up. Let me see what that looks like.
Yeah. So beauty of the scanner.
Yeah,
Right.
I know. That's a fact.
Yeah, you know what? For some reason, Daryl, that contract, and maybe it's glitching. It's not pulling up for us.
You're probably not looking at.
Yeah, no, it's just for some reason it's loading and then not loading when I pull it up on my screen. But that's all right.
Okay, here. Can you go over to the other one again? I gotta buy another one. Yeah, because this market's gonna fall apart, and it's gonna be all about this dollar, which is a trip. Okay, so I'm buying another one. Okay, so I got 2 of them on now.
There you go.
So here's the basis of it, folks. If I take this, watch this. Okay, so this is what we had happen out here is that DXM5. Now, what does happen on Fridays, the currencies is great on a Friday, is they would be intraday. But what we have, this is the dollar index up here, and what I'm banking on is that this dollar index rejected the 0.618 move. We already have 35,000 contracts that are out there. I don't need a lot of movement, and I'm looking at we're at 96.95, but I think we get 96.53, which would be quite a bit, really.
Yeah, so you're bearish the dollar, and then you're buying the euro US.
I'm buying the euro. Yeah. You know what I mean? And what I like about that more than anything is that we know that when you do these currencies, you don't need a lot of movement. Yeah. You know what I mean? That's what. Well, it's 300 ticks, which is a lot, but I only need 10 or 20 ticks to stay in the money. Right. Well, that's the money good time. If we go over,
and you're almost in that market, and so that's what you have to.
Also, just to give you a tip on the platform over here, it'll actually say daily 3 p.m. and that'll be the really wide spread.
And that's what, for some reason, and I'll just look at it. I was clicking on that, and it just wouldn't load for me. That's all right.
Okay. Scanner will load it for you quick.
That's right.
So if we go over to the S&Ps for a second, let's take a look at this S&P. What we have in this E-minis, folks, okay, is that it just busted, and you get the juice behind the move. So what we have here is that more than likely you're going to see it's the 2114. Oh, this is so crazy. Is it? Look at this here. I'm going to bring the NQs up for a second. What was happening at the break? We were talking about where the next place would be that it would stop, and it's the 45.14, and what that is, folks, okay, is from at 9:40 on the 27th.
Yeah, Wednesday morning.
That's the first place, okay, that had some good juice.
It was a huge opening on Wednesday morning.
Yeah.
Just so, I mean, that's where, yeah.
And so what you have here is this. If that 45.14 breaks, see ya. Okay, that's going to be at 44.99 in a heartbeat, and then that's a broken couple-day deal. Do you know what I mean? But it's really intriguing, isn't it? Do you know what I mean?
It's a lot of areas.
There's a lot of areas, man, and they stick out like a sore thumb, folks. That's the thing that is pretty neat when I look at these intraday setups. I'm always trying to figure out though, how does that work? Do you know what I mean?
Yeah, just natural, I think, supply and demand.
Yeah, right. And
natural selection.
And who's ever there, more than likely, is stepping in again. Meaning, it's not like a retail trader like us. I mean, it's some kind of institution saying, okay, I got a standing order there. I want to buy there. I like what is happening there.
They're seeing the same thing, probably, support resistance. That's
wouldn't a lot of it, though, be like you have a large position, you would know where to unload your position at. There's going to be a lot of retail traders at that location, so you take it down to that point as a market mover and then unload. You
know what? They're not that smart. If I've learned anything, I'm serious. Most big institutions, they accumulate wealth, but they're just giving it to trading desks, basically. And there's no doubt that those trading desks are smart. That's for sure, because they also know where the orders are. It's not trading like you and I are trading, folks. Okay, knowing where the orders are a whole different ballgame. It's like, okay, line them up, shoot them out, and that's it. You know?
Right, but I'm talking about guys like the banks that own these brokers and everything else. They have that massive depth, and
they do.
Yeah.
So wouldn't they know where that liquidity is to unload a position?
Yes. Yeah. No, that'd be a fact. Yeah. There's no doubt. Because, I mean, if you pay attention to this news at all, they've been unloading their positions right on their clients.
Exactly. Yeah.
No doubt.
Well, I mean, the clients asked for the order to be closed.
Yeah.
You're mean, man. You're a meanie.
Don't place the order if you don't want the order filled. That's all I'm saying.
So if we look at the Dow Industrials, folks, what's moving the Dow Industrials out here today on the way down, you get Microsoft is the #1 mover. That's down 66 cents. You got Procter & Gamble down 86. United Health is off 127. And Apple's down 132. Inside the NDX 100, what we have is that, let's see. So Altera is the mover on the way up. That's up $1.83. AVGO is up 353. Mondelez is up 65 cents, and Intel's up 49. On the way down, it's Western Digital down 225. Pace Car is off 138. Win just keeps getting killed, man.
I think is that their Asian markets?
It is.
Right? Yeah.
It is. It's all about Macau, China, folks. Okay. Bottom line is that they're still on the downtrend, and when you look at, it's pretty amazing too, the amount of money. I mean, I know Wynn Resorts is down from
quite a chart.
247 to 101, and
just the rise and fall.
Rise and fall, man. And look at this, okay? And this is what's so sick. So the last time that it had any juice on the way up.
I know. Look how far it goes back. It's all the way to 2007 even.
It is.
Yeah.
It is. And you can see
8 years.
You can see, at the high, pure distribution, no volume, no one's up here. Everyone is down here.
Right.
This is now what does happen is this. This is what I've found. This is now below where to me would be the supply and demand is basically equal, which is at 128, okay?
Yep.
Because that's where the volume is. But what happens, folks, is this. You go below that, it's a broken chart now. Because everyone, and this is just a fundamental deal, really, when you look at it, like everyone is in a losing position going all the way back to 2011. I'm not saying the 7, you know what I mean? Because it could be underneath, but see 2011?
Right.
And that's huge problems, folks, because see ya, don't want to be ya.
Yeah.
Look at Tommy starting to smile. The Dow's down 116.
I know. I put on some weekly binaries on Tuesday.
Yeah, you've been really playing with those weekly binaries.
I just look for volatility.
What are you finding? What are you learning with them? What are you doing?
Well, and I've gone over this where they're long shots in the dark, and so I'm more than willing to accept that the money I'm risking is going to lose, whether it's at best probably 5 out of 6 times, and I might be dreaming even with that because realistically I'm getting 10 to 1 on these types of trades. So I'm just looking for some volatility, and I was saying to my dad earlier for how against what I was thinking the week would do, and really every day besides Tuesday, and I put them on after Tuesday's decline, just thinking you could see some follow through in a short week where it started off bad, and I was willing to get 10 to 1, looking for possibly only 150 Dow points for the whole week. 175, I can't remember. And basically, my number right now is only 70 points away on the Dow. And that's for the whole week doing nothing for me. And, I put them on Tuesday and had almost 4 full days of trading. And I'm within an earshot of all of them. With,
One more downtrend.
So.
We just went down. We just went down 50 points.
Yeah. Oh, I know.
Right.
What's really wild is there wasn't even a market for them this morning. They were so out of whack. And so you can see how a binary can go from not even having a market to it creeps in where you can almost get 20 to 1 as it's opening on that market where it's at 95 by 99 maybe. And right now it's probably creeping. I don't know what. We'll pull it up, but. I'm 70 points away on the Dow, so that's a realistic number with half of it Friday, the end of the month to go.
And so also, can we go over? Let's go over and take a look at the Nadex spread that I have, because I believe the bottom of that spread is at 4,500, right?
That bottom 30%, remember, it's going to start going really slow on you.
Yeah. It does. That's what I want to show the folks, okay? Because I got
this is the best part you have to learn. It is where that premium goes and how it adjusts.
Right. Because the I had this on Tuesday also.
Yeah. So here's your bid offer.
Yeah.
And here's the market.
Right.
So you're making the entire profit of your spread at 4,500, and you're only 3 points away from that. But if you want to close that trade right now, 8 points of that is premium in there that you quite haven't gotten. So but that makes sense because you're not going to be able to ride that out for free if you're on the other side.
That's right, because this ride out, folks, is 415. So what?
Yeah.
This is how I deal with this, okay? Because when I had this the other day too, it was the same thing. And in fact, the indicative number can really go under 20 points, and it's still like 2 or 3 points above.
It becomes an out of the money option with premium.
It does. And so when I looked at it, I said, oh, this is pretty cool, because what happens, folks, is that you don't have to close these out. They'll close them out at the end. You're still going to pay the 90 cents a contract, but that's it. So I really like that, because that was like when I traded the OEX.
You're getting it
the OEX
exactly
was a
at the
cash
market.
deal. Exactly.
Right.
The same
no
deal.
Bid offer, you get what it closes
You get what it closes
nice
at.
and simple.
Which is cool. Now, the other part that I liked is this. Is that, okay, so right now we're at 45.04, right? We're at 45.11. I said, well, that's not bad either. You know what I mean? And when it was first hitting, I said...
To take off the whole rest of the day? Yeah.
Exactly. Okay?
Especially of a move like this.
It can come back up to that level, okay? And that's what I'm still going to get.
Right. I mean, you can see right now you have 2 contracts. You'd be able to get $1,224 of a possible $1,600.
Right.
So you're only paying a few $100s to take almost over $1,200 off the table. And that's a big move when you see this type of volatility.
It is.
Because this could easily jump back up to 45.30, 45.35, and just retest and maybe come back down again.
There's no doubt.
But that would be a $600 swing in those 30-point moves on each one.
Right. And what's so cool, so when we talk about these spreads, folks, this would end up happening. Let's say we get down another 40 points today. Yeah, I won't get the 40 points, but the other side of that, when they go up another 40 points or go over that, guess what? You don't have to worry about that either.
Right. And your trade gets to stay open.
Exactly.
Which is great. Because as we see, like the weekly binaries I have, I basically forgot about them yesterday, and the market's down 150, and I have a shot on Friday because I didn't have to do anything with them.
That's crazy.
Yeah.
It really is. Because as Tommy had just said, when we came in this morning, and that's why, in the Tigers Den, Jay loves trading the Dows too.
Yeah.
So, the Dow basically moves around. Man.
It does. Yeah. And, the NASDAQ has shown a lot of strength this week.
Oh, the NASDAQ's the strongest.
So that's why I started, when I chose the binaries, I didn't choose the NASDAQ.
Good for you.
Yeah.
Interesting. Okay.
Yeah. Tom O'Brien, Dow Martin, Tom O'Brien. You stay right there, folks. We'll come right back. Dow's off 135, NASDAQ's off 34, S&P's are out 16. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien, Darryl Mott, Tom O'Brien. And if you haven't test drove the Nadex platform yet, come over to our website at TFNN, folks. See the platform banner on the top, on the side. Hit either one of them. You can bring it up. They'll put $25,000 of paper money into your account. And, of course, every Tuesday, Thursday, Darryl has a great show at 1 o'clock. We do the show every Friday, 10 to 11 Eastern Standard Time. We'll walk you right through these different contracts. And what you can expect coming into the close out here today, it's going to be pretty intense, folks. Because you have the rebalancing of the Russell 2000. Russell 2000.
And the 1 and the 3, right, or whatever they have.
And it's intense because what happens is that they're selling as well as buying. Okay, and if you're in that Russell, man, well, what it does, it throws volatility into all the markets. That's what it does. And that volatility will start. The thing that blows my mind, that volatility is going to start. Well, we already have volatility because if the market stays like this,
the volatility is going to start.
Oh
We're
man,
down like 150.
It's going to be like insanity from about 10 minutes of 4 to 4 o'clock.
Is it? Okay.
Yeah, 5 past. Oh, it's sick.
Now, why are they trying to rebalance with the funds that
That's
they're
right.
holding?
They're rebalancing the funds because
why the end of the day? Would that be?
Because it's insane. I agree. It's like, why do you do it? What happens, folks, is that I've watched this get done so many years.
Yeah.
And it blows my mind that they just come in with these large orders, buying and selling, and they get taken to the cleaners, but they just don't even care. Yeah. Meaning, you'll see orders that go either under or over the bid and offer by like 10 to 12 cents.
They just know they have to do it.
They have to do it.
Yeah.
And it pushes everything around dramatically. And when we get a day like today, it's going to be more intense because what will end up happening is that.
Are they trying to time those trades, you think?
No, they're not.
Okay.
That's unbelievable. So I think what happens.
It's not the business they're in, though.
No, it's not. It's not. It's not the business.
They're supposed to represent the index, and so that's
all they do.
Yeah.
Right. You know. So it's going to be wild watching this whole thing shake out because.
So Darryl, what are you doing with your trade as this market has accelerated? Is that something you're looking at, and maybe?
I sold a 4,500 at $85.
Okay. So you're just making sure that you have some coverage.
Yeah, I mean, basically at $15 risk, I'll make $85 on the trade.
That's sweet.
And since
That's
I'm
cool.
using,
So you're using those binaries as a way to protect yourself.
I mean, basically, I'm collecting just on one iron condor. I'm collecting $150 in premium.
Right.
So
no, that's great. That's what I had said to my dad earlier. Right. What was I saying? Yeah, because you were talking about, I think one of the spreads had already moved, and so he was looking for more exposure than the spread was maybe going to give him. Even that master spread was only about 30 points to the downside on the NASDAQ, or 20 points. Exactly. And I was saying that's what I had said is, you can always take a binary at the bottom of that spread maybe, and then there's your exposure for a bigger move.
That's so cool. Yeah.
If that's what you want more exposure, then maybe, and that day, I think maybe even that day was Tuesday, and the NASDAQ was down, and you want to have more leverage, and the spreads sometimes don't allow you to have that big of a move, and then that's when you can do exactly that with a binary.
Yeah, it's pretty cool because you can do it if you're doing premium collection like what I'm doing right now. You can use that premium to pay for, like you said, out of the money binary, like the ceiling or the floor of the spread. Okay. Right. And still come out way ahead.
Yeah.
The other thing you can do is to help, like, let's say you're paying premium. Okay.
Okay.
So, like, you're the seller of maybe a close to the floor, low risk spread, right?
Yeah.
And it starts moving in your favor, but like you still have to overcome maybe like 3, 4, 5 points, right?
Yeah. Right.
Well, as it starts moving in your favor, you can actually then go in and sell a binary to collect the premium on the binary contract itself. Cool. Okay. At the floor ceiling to offset you can't do it right away because there won't be enough to pay for the premium you're paying.
Yeah.
But it moves a few points in your favor. You're not ready to take profit. You're actually maybe just now hitting break even on your trade.
That's nice.
Have to
hop in and you
I like
sell
those
it.
combinations.
Now you sell a nice premium rich binary, and if it does go all the way up and that binary expires out of the money, you'll more than make enough on your spread to pay.
Listen, man, thanks so much. Have a great weekend, safe weekend. Stay right there, folks. That man, Mr. Basil Chapman's coming up next to growl and prowl with you.
Great job, man. Good job, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.